Hello and welcome from me, Curtis Hutchinson and Philip Nothard, to this special Motor Trade Radio podcast interview. Today, we're delighted to welcome back John, Peter and David Smyth from Swansway Group. Rated 17 in the AM 100, the group-based family-owned business was founded by Chairman Michael Smyth and is still run by him and his three sons. The group has 21 dealerships covering Cheshire, the North West Midlands and North Wales, and represents 9 brands: Volkswagen Cars, Volkswagen Commercials, Audi, Seat, Cupra, Jaguar, Land Rover, Peugeot and Honda, and employs over 1,100 staff. It also operates 5 multi-brand Motor Match used car centres. This year actually marks the 20th anniversary of the business. So Peter, John and David are joining us to talk about those first 2 decades, as well as current trading and future plans. So welcome back to the show, gentlemen, and congratulations on your 20th anniversary.
Thank you very much.
Thank you very much.
So, I mean, fantastic achievement and welcome on, guys, to this. We should just try and get your father on as well, Michael. He'd have probably enjoyed this. But you might not get a word in edgeways, though, would you?
Well, that would be.
Yeah, exactly. Neither would I. Exactly. Yeah, exactly. But I mean, I say, welcome back. I mean, before we get on to some other areas in terms of the market, then let's talk about the 20th anniversary celebrations. And over the last 20 years, you sort of call out that you've had the estimate that you've welcomed 250,000 customers into your showrooms for sales, servicing, and repairs and MOTs. I mean, can you take us back to that the formation of the group following the acquisition of LC Charles business in September 2003? And what were your automotive backgrounds before you started moving into this?
Who do you want to answer that?
All of you. I mean, who want? Why don't you start off?
Yeah, you start off, Pete, and we'll chip in.
Yeah, we acquired the business 20 years ago, and it was a culmination of the fact that my father decided to exit his old business, which was the RRG Group, which he'd sold to Marubeni back in November 2000. And at that time, well, it's still the case, John, myself, and David were in no position to be able to retire and live off the fruits of what my father had made for all those years. Not that he would have given us any money anyway. And therefore, we sought a new opportunity. And we were fortunate, I think it's fair to say, and pretty well it was luck that we spoke to a company called LC Charles Limited, and we came to a deal to buy their business back in 2003. The reason I say we were fortunate is because the vast majority of brands that the LC Charles business had were Volkswagen Group brands, and we've been able to forge a very strong relationship with them over the last 20 years. Myself, John,
Peter, I think also we were at an age where we weren't in a position to retire, and also my dad was in a position where he didn't want to retire, and he still to this day hasn't retired. He still comes into work on a daily basis, and so we felt that we had something else to give. We felt that we could go again, and that's where we ended up with the LC Charles business. The reason it's in Crewe, it was based in Crewe. We had a 50-mile exclusion zone from Salford, I think it was, because that's where the head office of RRG is. And we ended up in Crewe 20 years ago. How many dealerships was it then, Pete? Was it 3.
Well, it was LC
Four.
Charles consisted of, if you like, 4 dealerships, which was an Audi dealership, Volkswagen commercial vehicles, and Seat, and it was on 2 sites basically. Those 4 dealerships.
But I think it's fair to say, Peter, that the business we thought we bought wasn't the business we bought, was it?
No, it wasn't. You know,
I was going to ask that actually. Yeah, yeah.
We probably, and listen, we've done this a lot of times in our. We've overpaid for businesses that we've wanted, and then used the skill of the group to make them into good buys. At the time, the bit that was very cheap and very good value for money was the fact that Audi were going down a market area approach, and the previous owner of LC Charles Limited was given the opportunity to run 2 Audi dealerships, one based in Stoke, one based in Stafford, which we acquired from the Rybrook business. And I think, from memory, we paid about £150,000 each goodwill for them. So that bit was cheap. The other 5 million that we paid, and at the time we acquired 0 property, was from the previous business owner. Now, move on 20 years and you ask yourselves, what have we done? Well, at the end of this year, we will have net assets, exclusive, knocking off any goodwill that we've still got on our balance sheet, of approaching £70 million. So in 20 years, I don't think we've done too bad.
No, you've totally changed that, haven't you? I mean, that's the thing, isn't it? You say you didn't have those assets initially, but over the years, that's how you've built the business. And
well, when we first started, because all the assets were goodwill, and let's remember, goodwill is fresh air. And I think that some of the people that are currently buying some of the large PLCs perhaps need to remember that. We struggled in terms of funders to actually do any borrowing without my father guaranteeing the money. Is that fair, John?
We've nothing to pledge it against, have we, Peter? Any borrowings we got?
It's interesting because, as you outline, over those 20 years, you have grown significantly, and now you've got this geographical stretch from Birmingham in the Midlands to Carlisle in the north. What have been, looking back now, what have been some of the standout highlights for you as the business has grown? And that's probably a question for you, Peter.
I think there's a couple. Going from being absolutely rubbish at selling Volkswagen vans to being probably one of the best in the country. And I don't say that lightly. I think you could quite happily pick the phone up and speak to the likes of Cian O'Brien and ask him that question. And I think our numbers stack for themselves. Yeah. I think the other very, very important move we made was when we acquired the Thompson Motor Group, which were 3 Audi sites in the north, which is why we've ended up in Carlisle, Blackburn and Preston. Would you agree with that, guys?
Yeah. And but in fairness, it wasn't plain sailing, was it? It's never been plain sailing. When we tend to purchase a business, we tend to go backwards before we go forwards.
I think we also forget, John, when we bought Thompson's, it was right when we'd done the Brexit vote, and we nearly pulled out. And in fairness to me, Daddy said, "Listen, I've never gone backwards. Let's get it bought and make a do of it," which we have.
Yeah. Which we have. But the first couple of years of that purchase were tough, weren't they? Because we put infrastructure. We tend to, obviously, we have a specific infrastructure that we put into businesses, and that comes at a cost. But it also builds great, solid foundations going forward.
And is this what you did? I mean, you mentioned that Volkswagen commercial business. Is that the same model that you used for turning the Audi sites around?
Yeah, in so much as we were singularly fortunate with commercial vehicles, with the management team we've put together, and they in vans and commercials, they have a phenomenal skill set, which they've been able to grow. So we've been able to grow our own managers. I think that we first struggled with with the Thompson business, because it's sometimes very difficult buying a business off a private owner who may be a little more philanthropic than perhaps a PLC would be, because he had friends within the business. So when a company like ourselves take over, very often there's a lot of pushback, and people, as we know, don't like change.
Yeah, and I mean, you talked there about, obviously, management teams and things like that. And I mean, David, if we bring this a little bit sort of up to date a little bit, and still remaining with the sort of 20th anniversary, and how is it going? It's obviously been a very busy time in this, and I believe from what's been publicised is that there's been a long service dinner for 23 team members who have been with you all the way from the start.
And the thing is, a lot of those guys, I mean, there's people there that, started off in the 20s, they're now in the 40s. It's a long time. And, we've built great relationships with them. And, to work for somebody 20 years is significant.
And are they, I mean, obviously, I mean, this is your thing, isn't it? I mean, you've built that team, haven't you? And you've kept with it all the way. And, you three and your father, do work closely, don't you, in terms of managing the business and what needs to be done within the business. But what this is, obviously, you've got that strong team that knows you guys inside out and the business.
Yeah, I mean, whenever we're interviewing people of a senior level, we always tell them that we are not absent landlords. We are in the business on a daily basis, and we because we have worked at the sharp end, we know the things to look for. For example, I know my brother Peter, one of his pet hates is debtors, and he will get somebody's debtors list and scrutinise it and take them line by line. And sometimes that can be uncomfortable to people, but that's the way we work. We look at the detail, and that's what it's all about.
It's uncomfortable, John. It's uncomfortable for people that have worked very often for PLCs because they're not used to that scrutiny, are they?
No, absolutely not.
I mean, talking about being close to it, we have spent the vast majority of today, apart from a couple of meetings, talking about how we navigate our way through the dynamic used car situation that we have at this moment in time.
And that wouldn't necessarily, you'd say, this is where your father, Michael, and you guys, it's still a family-run business. It's your money. You're involved with it on a day-to-day basis. And when you go home at night, you don't switch off, do you? I mean, if your father's got a problem with anything, then he'll have a word, won't he, with one of you whenever he needs to.
No, he'll have a word with all three of us in 3 seconds.
Is that the way it works? Right, okay.
Yeah, we get 3 phone calls, I think.
But it's not uncommon for us to, both me and Peter, both be at home and watch our cars go through the auction. Because, like, for example, last night, was it last night or the night before? I can't remember now. But we were both, night before, we were both at home. It's probably 7 o'clock. And we had an auction at Mannheim in Manchester, and we get a printer for the cars, what they stand at, what the reserves are, and we look at those. This is the kind of detail that we look at it, because we're a bit anal like that. I'm sorry, but we are, and from that we can see whether the processes within our dealerships are operating correctly, i.e., are our sales managers standing the cars today? And if they are standing the cars today, we know what we want to know why. So yeah, we do work when we're not meant to be working, if you know what I mean. Obviously to my wife's she's used to it now.
I'm going to say she's had long enough to get used to, hasn't she?
Yeah, she has. Yeah.
John, question for you. The last 12 months have seen you continuing to heavily invest in the business with the opening of a brand new purpose-built Volkswagen car and commercial centre in Oldham. Also the opening of a car rental business also in Oldham, and the launch of your car buying division, Sell to Swansway. You've already mentioned about this dynamic used car situation as you described it. What prompted the launch of Sell to Swansway, and how is it going?
Well, obviously two different investments there. I mean, with regards to the Volkswagen car and van centre in Oldham, and also the car rental, that's all one business within the one big business. I think the cost of that centre was about £8 million. David, he does the building, so
no, it's actually it's a touch more, John. It was 10.5.
Oh right, okay, okay, £10.5 million. And so obviously that was an opportunity to expand with the Volkswagen network. We saw it as an opportunity. So yeah, we and that I think that was put to us just after COVID, wasn't it? So quite a brave move, to be honest with you, from ourselves. But we thought it was the right thing to do, and we are operating profitably from that site. So you know,
in fairness, some of our brand partners told us to be quite cautious with that, didn't they? They thought it was too brave a move.
They did, but you know, we saw the opportunity, and we'll make it work. Sell to Swansway is something totally different. It's our car buying. It's, to be honest with you, we have our motor match sites, which two are tagged on to Honda dealerships, but we've got a bigger site in Chester, and we have a new site which is going to start up in Crewe, which is taking over from our Jaguar dealership. So we need to source. It's a way of sourcing used cars for them. You may ask the question, well, why do you not just source the cars from within group? Yes is the answer to the question. However, we found that Sell to Swansway probably buys specific cars which we wouldn't take in part exchange, and so we saw it as an opportunity. We've not got visions of grandeur like other people who set up similar type buying services. We want to buy about 3,000 cars a year by that particular channel, and then obviously we will take part exchanges in at dealerships, which Motor Match will retail as well. So that was the whole point of Sell to Swansway. It's quite expensive to set up because it involves quite a significant amount of optimization on the internet and all that kind of stuff, and advertising. But so far, it's when you take into consideration the fact that we bought a specific amount of cars and made profit for them, it is making money. So yeah, very positive. We're not buying the equivalent of 3,000 a year at the moment. We're probably buying about 120 a month via that channel. I think it's our opinion that we should get up to 300 a month. So it's onwards and upwards, but it's in its early days.
And in terms of the sort of geographical reach that you're achieving with Sell to Swansway, is it outside of your areas of operation? Are you pulling in cars from outside?
There are some, but we tend to concentrate on, because obviously transport costs add to the standing value. So we tend to. It's obviously preferable to local area, but that doesn't stop us for the right car, obviously, and at the right price.
And presumably you're also pulling in cars from outside of the franchises that you represent.
Yeah, absolutely. Not franchises which we won't obviously not necessarily operating. Definitely, that is bringing, because obviously our multi-match sites are multi-franchise sites.
And overall, how important are used cars to the business now? Because you did allude to this dynamic used car situation.
I think I think it's fair to say that my belief, and I think it's Peter and David's belief, that is that with the oncoming threat of the agency model, used cars are becoming more and more important to the franchise dealer.
Yeah.
I mean, we compare our profitabilities year on year and month by month. So this morning we were comparing our profitabilities throughout our dealerships on a daily basis within the month. So I was comparing 2022 with 2023, and basically we're selling. I think the synopsis of that is we're selling just similar amount of new cars, perhaps slightly less, but for certainly less margin, because obviously 12 months ago margins were strong in the new car marketplace. We're actually selling, because of the way we have reacted, we're selling more used cars than what we sold this time last year. But similarly, even though we're selling more used cars, we're making less margin, because obviously margins were stronger on used cars 12 months ago. So as a result of that, F&I is about static, to be quite honest with you. So we our profit, obviously, I think our profits are down month on month comparing on the years. However, we're still in a good position. We're still in a good place.
And I mean, sticking with finance there, that your year ends, I think, were published in April of this year, and you reported a 23.3 million profit before goodwill and 22.3 after goodwill on a turnover of 819 million. And you're talking there about margins and F&I. Is that really the standout for that performance? And what's it like now since those figures were published?
This year it won't be as good. I think we'll probably look at making 15 million, and then after goodwill write-off, we'll be down to 14.
And I mean, clearly the two things there is obviously that goodwill into it that you've got in terms of that write-off and things like that into it. I mean, I think when we talk about performance, and we've seen other financial performances come out for last year and trading periods for this year, there's been a lot of noise where they sort of talk about a fall in profitability, but actually it doesn't put in context of how strong the market has been and how strong margins have been, does it?
I think it's important to point out that for 2019, Peter, you've got the numbers, and which did the company make?
Made £5 million in
2019.
So, when David says it's going to be 15,
that's what I mean. Yeah.
So pre-COVID. Pre-COVID. I think what everybody forgets is the last 2 years were absolutely,
They were freak years, weren't they, John?
Yeah, absolutely.
I don't think we'll ever see that again in our lifetime.
And that's the bit that I think people are missing when they see some of the current year-on-year performances, that it is just that. It's a year-on-year performance based on an extraordinary period in the sector. And you make that point there, falling from 22 million to 14 million after goodwill. But actually, that 14 million is still 9 million above your pre-pandemic 2019 performance. So it's a sterling performance. Not quite as good as last year, but still a sterling performance compared to where you were in pre-pandemic.
Absolutely, yeah.
Yeah, listen, there's a number of things you've got to take into consideration. You've got to take into consideration that margins are less. It's starting to normalise. And the other huge shift has been the cost of money. And if you look at every £1 million worth of used car stock that you've got is now going to cost you £50,000 a year more just to have that inventory sat there. And you combine that with reducing margins compared to what we've actually seen between 20 and 23. If somebody said to me, would you take £14 million or £15 million next year, I would snatch it with both hands. Believe me.
You had a piece of paper, Peter, didn't you, in 2018 called Peter's Perfect Year. And
yeah,
we thought if we hit all the bells and whistles, we'd make 10 million.
I do like the concept of Peter's perfect year. That's
there are other things involved in Peter's perfect year, but I would rather not get into them.
I'm sure there are. You've already touched on performance in year to date, and I guess what I'm particularly interested in is you've addressed this sort of normalisation. We've had these two almost freak years, and we're seeing a bit of normalisation creeping back into the sector. So, how was the September plate change for you as a business? Probably one for you there, Peter.
How was it? Well, it was still reasonably strong, but against the budget that we had in place, we fell short on our budget. For the other 8 months of this year before September, we beat budget quite comfortably because we'd set ourselves a target of making just over £12 million. The final quarter is going to be tough. It's gone back to normal. And although people say, everyone's been saying, oh, there's going to be a shortage of used car stock for 2 or 3 years. That is not the case at this moment in time. There are more cars than customers. And that is why we are getting the correction in the market that we were getting. And if you actually think, and you're going forward into 2024, I think people will undoubtedly, if they've been sensible, they will have strengthened their balance sheet over the last couple of years. So in 2019, our net assets were 31 million, and now they're 70 million. And that's after we've had some dividends as well. But if you counter that against the fact that if you're carrying 40 million pounds worth of inventory, your costs have just gone up by 2 million pounds.
Yeah.
There will be people next year who will look back at 2019 and 2018, and if they're ahead of those figures, it may very well be that they've done a job very well because of the changes that are going on in the marketplace. You've got agency, you've got the transition to EV, which is bumpy, and you've also got the fact that, and you said it, used car prices are still reasonably high. So it's going to be interesting.
And I mean, a final question. I think I should come to you on this one, David, and keep away from John and Peter. But I'll ask it anyway. You mentioned there, we as a dynamic group now celebrating its 20th anniversary, and you've evolved. You've bought businesses, you've built businesses, you've entered new markets and new territories with your car buying and other areas of the business. And we've mentioned agency a couple of times there, and and we talk about EVs and the transition to EVs, and I've had the pleasure of having this debate on a panel session recently with you. How is it going, and how as a business are you moving towards this transition to electrification in the broader sense, but actually, in the shorter term, they move to agency, or what might be more perceived as a hybrid agency marketplace?
Well, it's concerning, but at the end of the day, we can't do anything about it. I think what we are doing is we're having a lot greater focus on used cars, where we've got a lot more control of our own destiny, and that's what we see as the way forward. I don't know what Peter and John think.
No, I totally agree with you, Dave. I mean, the electrification is, that the cars are coming, and I know although the Prime Minister's put back when the ICE ban's going to be, but that's not going to change whether the cars are going to come. So that is going to be interesting. Whether the public out there actually want to I think they're still confused over electrification, if you ask me. And they're probably more confused now. So yeah, I think the public are confused when it comes to electrification. Should they or shouldn't they? I mean, now the Prime Minister's put it back, gives them more of a chance to actually buy an internal combustion engine. But the question is, these electric cars are coming, and they're coming thick and fast. So obviously, it's some manufacturers' idea to go down the agency route with those electric cars. Well, obviously, I hope they've got deep pockets, because I think they'll need them.
And I mean, you know, say we've had this conversation, but this, you know, I look at it from a retail perspective, and you know, you've got multi brands as a business. You know, you've got to try and manage that short-term to long-term strategy as a business as to where you're taking your business. You know, we've been looking back 20 years and how you evolved that business over 20 years. But, you know, key to your success is building that territories, building the strength of the business, building the strength of you three and your father, running that business and being in the detail. I mean, is it a case that, you know what, you'll just manage however you need to manage it, whether that's battery electric vehicles, under agency, under non-agency, you know, new Chinese brands coming into the market under a sort of a more NSC proposition? Is it just that you'll go in where you need to go that suits you as a business, and if it means moving OEMs and entering new markets?
Yeah, there is. I mean, listen, it reminds me of that film with Clint Eastwood, Heartbreak Ridge, about the Marine. We'll improvise, we'll adapt, and we'll overcome. And I mean that. The other thing is, when the advent of agency came out, we were told by numerous OEMs that the need for a salesperson would eventually become obsolete. We recently really got behind one of our brands' pushes called Make the Switch. And what became more apparent than anything is that cars, despite what they said, will need selling. Not just somebody with good customer service skills like they have in John Lewis, if indeed they do have them there anymore, or Apple. Salespeople will be there, and there will be a need to sell cars. And if the market has to be pushed, which undoubtedly it will be, then the OEMs will incentivize the dealers to sell those vehicles. I was looking at the top 20 vehicle manufacturers and the amount of money that the OEMs are putting behind the cars to sell them. And interestingly, the brand that was putting most money behind it was Mercedes-Benz, closely followed by Volvo. And I can send that information to you. Cars do need selling, and the dealer networks are absolutely vital to make that happen. At this moment in time, it's like David said, the people at the OEMs are acknowledging us and listening to us. Whether or not they at the UK end can make the decision is debatable. So we're just going to sit, watch. We're going to embrace what they ask us to do, and we're going to take advantage of the opportunities that will undoubtedly arise.
Yeah,
there always is.
Yeah, I think that you have choices as a business. You can evolve, you can adapt accordingly, can't you? And I think we've just got to be very careful that, you know, it's been clear. And you know, you mentioned one of the OEMs there is transition to agency, and it's been publicised the amount of process changes they've made since moving to agency. As you know, it becomes more and more clear of that relationship with the retailer and the work and the operational process that the retailer is heavily involved with. And you know, a consumer just wants to walk into a showroom and receive the service, don't they? And they don't care whether it's the OEM or the retail that's offering that service, do they?
They just want a seamless, comfortable journey, and they want help to buy.
And they want to feel they've had a deal, I think, Peter.
Yeah, they do. Yeah, they do want to feel that they've had a deal, particularly where value for money will become more and more important, because money is becoming a more expensive commodity. So you're going to look as a consumer to get more value out of the money that you're spending.
Yeah. Well, I mean, I know that, you and I, Peter, and I on our own can talk a lot about this kind of stuff in the market, but all three of you and me and Curtis as well, we can talk about all this that's going on. But I mean, it's been an absolute pleasure, and I mean, for me and Curtis, congratulations on the 20th anniversary. I know it's kind of a few months back now, but 20 years, long time. What you did with your father. Does it feel it? Does it? Yeah, but it feels it more in the last 3 years than ever, doesn't it? Yeah. But for me, I mean, it's wish you the best for the next 20 years. And I think you're going into it. You've got a lot to offer the sector, and you're taking things strategically well in terms of what you're doing, how you're expanding, what you're moving into. So, just wish you all the best for that going forward.
Thank you very much. That's very gracious of you. I'll be 78 in the next 20 years. Dave will be 80.
Still be going. Dare I ask how old your father is today?
Yeah, he's 84.
Yeah, so you'll have another 6 years after that. In 20 years' time, then you'll be all right.
Yeah.
You're hoping not. You planned to retire how many years ago? 20. You didn't have enough then, and you did this. So yeah, let's hope you're in a better place in 20 years' time, eh?
Yeah, let's hope we are.
Well, thanks once again to John, David and Peter from Swansea Way for joining us today. That's all for now. You've been listening to a special Motor Trade Radio podcast interview powered by eBay Motors Group. We'll be back with the industry headlines on Saturday. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, and on your podcast feed. In the meantime, if you'd like to get in touch with Philip and Curtis, come on the show or send a press release, then email them at motortraderadio@yahoo.com. You can also join the Motor Trade Radio, LinkedIn and Facebook groups, or follow the podcast on Twitter. You've been listening to the Motor Trade Radio podcast, bringing you all the chatter that matters.